In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Airbnb shares closed down about 4% a day after going public. We're going to talk about its sky-high valuation and the tech industry in general with early investor Reid Hoffman, co-founder of LinkedIn and partner at Greylock. Plus, breakup talk. The FTC lawsuit against Facebook has renewed calls for the social network to break up WhatsApp and Instagram. We'll talk about what is at stake for Mark Zuckerberg's social media empire. And vaccine rollout. We are awaiting the FDA's approval of implementation of Pfizer's COVID-19 vaccine. If it comes, expect Americans to be inoculated very soon. All of that and much more this hour, but first, tech stocks fell alongside the S&P 500. Disney shares, though, hit a record after Investor Day yesterday. I want to get straight to Bloomberg's Katie Greifeld in New York. Katie, Airbnb, of course, pulling back a little bit as well, which we've been watching with great fascination over the last 2 days. Break down the day for us.
Well, Emily, there was definitely a risk-off vibe to trading today, but there was one very bright spot that you mentioned, and that's Disney. It had just a banner day in markets after the company projected that Disney Plus global subscribers could hit 260 million by 2024. That's from about 87 million currently, and for context, Netflix has about 200 million subscribers. So, of course, that lifted Disney shares up over 13%. To a record high. But if you look down the board, there's a lot of red. Qualcomm fell over 7% after Apple said it started making its own cellular modems for their future devices, which would definitely be a long-term headwind for Qualcomm, and that was reflected in markets today. And like you said, Airbnb, DoorDash, both ended the day lower after just skyrocketing after their trading debuts this week. So clearly investors are still trying to figure out how to price these IPOs. And again, like I said, it was a risk-off day. Markets were waiting for any progress on fiscal stimulus and just didn't get it. And of course, time is running out for lawmakers to pass anything by year end. The S&P did try to pare losses after Congress passed a stopgap funding bill, but it didn't quite get there. And for the week, the index is down about 1%. But even still, the week's biggest loser was the tech sector. The NASDAQ 100 ended the week about 1.2% lower. It was weighed down today by that drop in Qualcomm that I mentioned. And even though there was a jittery feel in markets to end the week, you still saw small caps hang on to their gains. The Russell 1000 gained for a 6th straight week. So that rotation trade is still alive and well, Emily.
All right, Katie, thanks so much for that update. I want to talk a little bit more about Airbnb now, pulling back a little bit from the highs over the last 2 days. I sat down with early investor Reid Hoffman, partner at Greylock, co-founder of LinkedIn, to talk about the listing and the sky-high valuation. Take a listen to his reaction to the trade.
Well, obviously, I've been super pleased for the company and for the team and the recognition for what the company is trying to do in the world and how important it is as part of the future. And I think that's part of what you see reflected here. I think that the question about like, how do we transform travel? How do we transform a sense of community, a sense of belonging? I think those things are super important. And I think that the market is responding to it. So overall, I would say I've been just delighted.
I told Brian that the price had doubled live on air yesterday, and he seemed genuinely stunned. He was at a loss for words. It was a special moment. But if even he is surprised, are you at all concerned that the valuation is too lofty, that tech valuations in general are getting out of hand?
Well, I'm a little bit worried about the overall market generally, because I think we still have a lot of the pain of the pandemic. How it's going to affect small businesses and Main Street and all the rest of it throughout our economy. And I'm kind of worried for society and the economy as a whole to get back to the necessary rebuilding that we need to do. And that may be reflected in, I don't really tend to think about valuations in a days and a months period. I tend to think in a years period, because it's like, what are you building for the future? So I I guess the short answer is kind of strange for investors. I'm not sure, but I'm most focused on like what do the next few years bring us.
So let's talk about that. Tech has seemed so decoupled from what's going on in the rest of the world, what's going on with regular Americans in America. Are you at all concerned we're in a bubble that could burst, or do you think the good times are going to keep on rolling?
Well, I think fortunately, ultimately for the country and for the tech industry, what we're seeing from the pandemic is a huge acceleration of the digitization of work, of life, of all these things that kind of matter to us. And that, of course, means more rapid adoption of the technology products, more innovation, more fast growth, and that will be good for the tech industry. Now, what I think what's really important is that we bring the tech industry to help everything else. Like we bring more tech platforms to help small and medium businesses, for example, like Airbnb does in terms of tiniest. It's like individuals paying their mortgage and rent through being able to build a tree house in their backyard or any number of other different ways that you can develop upon Airbnb. And I think that's what's going to be really important, because the technology is going to shape us, is going to be able to get us out of the recession, to be able to build the industries of the future, including SMBs. But we need to get there. And I think that's what's really important.
Now, you wrote a beautiful post about your investment in Airbnb. I know some of your colleagues didn't think it was a good idea. Who wants to rent out someone else's couch? And it has been a long 10 years, 12 years since they started the company. What has stood out to you? What makes Airbnb and Brian and the team different, especially given so many ups and downs and the lowest point back in March?
Well, it wasn't a surprise to you probably and a number of other people that when I launched my podcast, Masters of Scale, I made Brian my very first guest because I'd learned so much from him and Nate and Joe about how to do this. And what I'd learned from that very first meeting through it is that they didn't just treat it as design of a website or design of an interaction or graphics. They treat it as the design of an experience, the design of visiting a place, the design of connecting with the local community and belonging. And they looked at all of these different elements, including, doing all of this very gritty work about going and visiting some of their hosts and finding out what was going on and all of this. And that's part of what I think is part of their magic, and why Airbnb is built not because it's like, it's AI algorithms are a whole lot better, but because its human experience is better from this design perspective. And that's what I think I've personally taken away from it.
Now, obviously, this is a week that you're celebrating, the team is celebrating, but there is a lot of talk about that $4 billion that may have been left on the table. Some of your VC peers, like Bill Gurley, have been out there saying the IPO process is broken. How are you thinking about that? Should the process be reevaluated? I mean, you took LinkedIn public, you're helping to take a number of portfolio companies public, and I wonder, are you aghast at the money that could be in their pockets right now?
Well, I think that's the whole thing is a little simplistic and fictional. I mean, we had the exact same commentary when we took LinkedIn public, because LinkedIn also went substantially up. And part of what everyone seems to misunderstand is this is a journey of decades. It's a journey that where you're going forward. And so part of what you do, you say, well, what's a price that I can get a lot of long-term investors, people who will be with me for a decade, 2 decades in building this company. And you try to get that price, getting them on board as high as possible. That will always probably be a little under, maybe sometimes surprisingly under what the market price is, especially in the first month afterwards. And that's fine. That's a month in a multi-decade journey. And so I actually don't, and it's not clear that if they had gone out and said we're pricing this at 146, that it would have had nearly the same demand or anything else, because these are other people coming in saying, hey, we think you're a buy at this price. Some of it you might have known, some of it you may have learned, but that's okay, because the real question is what you're doing over a decade.
Now, that said, it goes back to this idea that tech is somewhat divorced from what's going on in the rest of the world. And I know you said you're worried more broadly, and I'm curious, what is your advice to entrepreneurs right now? I mean, are you telling them raise right now, strike while the iron is hot, or, we can wait it out? It seems like this positive environment in Silicon Valley is going to extend?
Well, I think as an entrepreneur, you're always focused on speed. You're always focused on motion. So, generally speaking, entrepreneurs who are thinking, hey, I can go public now, or entrepreneurs saying, hey, I should raise now, that's generally a good idea when the markets are open and believe in the future and are pricing for the future. That's a good thing for entrepreneurs to work on financing. So broadly speaking, that's the advice that I'm giving. Now, that being said, again, the whole thing is you're building for a decade and more. You're building for the long term. So you don't ever like just do something financing because you can. You don't just, your success isn't financing. Your success is in how you transform the world, how you offer products and services that are magical to people, how you help elevate your society, create new jobs and employment. And that's the real metrics that you're kind of looking at. But of course, availability of capital is a very important part of entrepreneurship.
Now, you told us earlier this year that you were investing in founders that you'd never met, companies that don't have offices, that it's, the pacing of deals has been incredibly fast. What's happening now? How competitive is it? How often are you making investments, and how long does that keep up?
Well, all of us at Greylock have been kind of running to keep pace with what the general acceleration in the industry. You would have thought that, oh, well, since traditionally it was like you go by your office, we visit your offices, yes, we still do calling a bunch of customers and all the rest. But actually, in fact, we're finding the pace is, if anything, picking up.
Reid Hoffman there of Greylock Partners. All right, coming up, more legal trouble ahead for Facebook. We'll look at the antitrust case that may cost the company WhatsApp and Instagram in the most extreme scenario. That discussion is next. This is Bloomberg. California has confirmed it is joining the U.S. Justice Department's antitrust lawsuit against Google. The state attorney general alleges that Google search violated federal antitrust laws by entering into exclusionary business agreements that shut out competitors and suppressed innovation. Google maintains its response, saying people use Google because they choose to, not because they're forced to or because they can't find alternatives. Google maintains the DOJ suit is, quote, deeply flawed. Meantime, the U.S. Federal Trade Commission took a major step toward the possible breakup of Facebook by formally filing an antitrust lawsuit against the tech giant and accusing it of abusing its monopoly powers in social networking to stifle competition. So how might this impact the empire that Mark Zuckerberg has built? I want to bring in Bloomberg Tech's Sarah Fryer. So Sarah, some small developments today. A judge has been assigned to the case. What is the latest that we know?
Well, this is essentially the worst thing that could happen to Facebook because Instagram and WhatsApp are their future. And this is what they have invested in these products. They haven't asked for much revenue from WhatsApp because they are trying to build the right kind of business model. They've really taken their time with trying to play these out. And in the next few years are it. I mean, this is when it's going to happen. And these are also the years that the FTC is asking that these companies get broken apart. Now, it would be very technically difficult for Facebook to do this. First, they've come out with this response saying that the FTC already approved these deals, or at least let these deals go through in 2012 and 2014. So to ask for them to be undone now would have a chilling effect on the M&A market.
So how bad would a breakup be? I mean, obviously, this is not what Mark Zuckerberg wants, but, it's a huge company. If they have to spin off Instagram, how much would it hurt Facebook?
If you think about Facebook's next big opportunities, it's all in Instagram and WhatsApp. Instagram provides the path to, e-commerce strategy for Facebook, the next big revenue stream after advertising. And WhatsApp is part of that with the tools they're building for businesses to run customer service on WhatsApp. Zuckerberg is trying to integrate the messaging components of these apps. Instagram has a younger demographic. WhatsApp has a more international demographic. These products have a better reputation than Facebook, which has really had its name used in angry statements from regulators on all sides of the aisle in every country. this company has been under fire, but people still have an affinity for Instagram and WhatsApp. So it would be quite devastating for them for this to be untangled.
And at this point, certainly this is what the FTC is recommending, unwinding these acquisitions. But how likely is it that that would be the actual remedy at the end of it?
Well, I actually feel like we're going to see a long legal battle of Facebook using every trick in the book to make sure that this does not become the end of the process, that they don't get broken up. And furthermore, the company is working to integrate these products and to tie them closer together as this decision gets deliberated. The company it has already made it so the advertising system on Instagram is Facebook's advertising system. The infrastructure that these apps run on is Facebook. So untangling them would also be very technically difficult. Not that that would stop the company from reaching that fate, but the company is likely to argue that it is either impossible or unreasonable to do. Now, there's a lot of anger over Facebook right now. It's not just the FTC; it's more than 40 state attorneys general. So they are facing a very strong fight, and it's not just that. We haven't heard yet from the DOJ what they will do. We have Congress seeking to punish Facebook for its monopoly power. So I think it's going to be a very rushed few years for the company up ahead.
All right, Bloomberg Tech's Sarah Frier, thanks so much. Obviously, this is going to be a big storyline for you and for us over the next few months and potentially years. I want to get to some breaking news now. We know that Tesla will be replacing and joining the S&P 500 and 100. Now we know which companies Tesla will be replacing. Tesla will replace apartment investment in the S&P 500 index and replacing a company called Occidental Petroleum in the S&P 100. This will happen on December 21st when Tesla has been scheduled to be added to the S&P 500 and 100. And of course, we will be following it on that big day for the company. All right, coming up, we are only a few weeks away from the end of 2020. That means companies are ramping up to meet last-minute holiday shopping demands. The founder and CEO of Commerce Hub joins us next to discuss. This is Bloomberg. With a dramatic rise and shift to e-commerce during the pandemic this year, retailers, carriers, and the entire fulfillment ecosystem have had their operations stretched to the limits to meet customer demand. A recent survey by Commerce Hub found a 40% increase in consumers who said they will be doing more than half of their holiday shopping online. For more now, we're joined by Commerce Hub founder and CEO Frank Poor, who is also the latest guest in our Retail Transformed series. Frank, thank you so much for joining us. Your company connects retailers like Walmart and Home Depot with suppliers to fulfill orders and organize deliveries. What kind of activity have you been seeing over the last few weeks?
So we've been seeing dramatic rises in the volume of orders that are going through. Certainly, e-commerce is becoming a significant portion of this year's shopping. It's become an increasingly greater and greater proportion each year. Just this year with COVID, people aren't going to the stores. The stores aren't hosting, midnight parties for big screen TVs the way that they were. So everything is really moving online and into a digital commerce situation.
Well, as someone who's probably doing 100% of holiday shopping online, it's been interesting to see the trends. I'm noticing, delivery times being delayed. I'm curious what the biggest challenges have been of pulling off all of this additional traffic.
Yeah, the challenge is going to be delivery. I think, you're saying you're seeing delays. I think we're going to see greater and greater delays in the next couple of weeks. Everyone is, tends to procrastinate, and this year is probably no different. The difference this year is that warehouses are going to be stretched to the max. The carriers are going to be stretched to the max. So, some of the major carriers have already told retailers that they're not going to be making certain pickup runs in their stores. So others are being limited into how much they can actually ship. So if you can imagine, with COVID, the warehouses are going to have fewer people in them because of distancing. So the warehouses are going to have less throughput. The trucks are going to be maxed out. And so everything is going to be taxed this year for sure.
Now, a vaccine is around the corner, but it's going to take some time to roll out. I'm curious, what is your outlook on the future of physical retail after we come out of this?
Sure. So I think, these kind of events have a tendency to change things and to persist those behaviors. I think that we're going to, most of us probably didn't do curbside pickup. Most of us probably didn't do grocery delivery. Those kinds of services are now becoming part of our lives. And in much the same way, once you fly first class, you probably don't enjoy flying coach as much as you did. And if you have to drive, coach was good at one point. So, I mean, you get used to these things. You get used to grocery pickup. You get used to curbside delivery. And I think that these trends are going to persist. And I think online commerce is going to continue to persist. All commerce is becoming digital commerce. You can't even order a pizza without, picking up your phone.
Well, it's certainly a good time to be in the online commerce business. And this week was a huge week for IPOs. Commerce Hub is on the list of companies we should be watching to go public. I know Insight Partners took a big stake in the company. You've hired Morgan Stanley to explore those options. Where is Commerce Hub on that journey at this point? Do you have a timeline to go public?
Well, I don't have an actual timeline to go public, but I can tell you we did a recent acquisition, and we also just took on, as you said, a major investment from Insight Partners. So, the company is at a great inflection point. We've been building for years, and I think drop shipping and e-commerce is really coming into its own at this time. And Insight Partners are a great partner to really help us scale from this point to the next level. So we're excited about it.
So what are the top priorities? What are the top priorities then in 2021?
Well, from a e-commerce perspective, obviously Amazon has a tremendous leg up. They own their own physical facilities. They've got tremendous ability to route orders from multiple locations to get timely delivery. Other retailers are catching up. I think, we're going to be focused on really trying to continue to digitize the supply chain, making it easier for retailers to be able to offer, an endless aisle of products, but be able to achieve a customer experience where they can mimic what Amazon is doing, 1 and 2 day delivery with outstanding service.
Okay. All right. Well, we'll be watching all of that. Commerce Hub CEO and founder Frank Poore, thanks so much for stopping by during what's clearly a busy time. Coming up, Pfizer's COVID-19 vaccine may get an emergency authorization from the FDA today. We are following all of that according to the New York Times. More coming up next. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. The FDA is scrutinizing recent reports of allergic reactions to Pfizer's COVID vaccine as it readies an emergency use authorization, a step that could come as soon as this weekend, according to top U.S. health officials. We're joined now by Ann DeWitt, a general partner of the investment team at The Engine, which is an investor in a number of biotech companies. And Ann, I know you've been following the latest developments very closely. The recent reports about concerns about the possible reactions to the vaccine. How concerned are you about that? And do you think it will slow down this process at all?
Hey, Emily, I think that we have a vaccine on the cusp of approval is really important. So there may be additional elements, of course, to study around safety and efficacy. But I think the fact that we've got a great starting point with these 2 vaccines that are so close is really important. And of course, we'll need to do more work as an industry to make sure we've got a number of the populations and people covered. But I think we've got an exciting starting point.
What is your outlook on how challenging the distribution process will be, especially if you need not just 1 shot, but 2 shots within a certain amount of time, and of course, a huge population?
Right. Yeah, certainly the logistics and the infrastructure required really a formidable challenge, but I think one that we're ready to mobilize to address that with the 2, as with the 2 vaccines that are eminent and in FDA right now with 2 shots and also refrigeration requirements. I think the opportunity to really look at a number of technologies that are focused on addressing logistics and infrastructure, getting down to room temperature stability, a single dose with a path to scale those to the volumes that we need is really important. So as we look into 2021, we're really excited about one of the companies that we've supported called Vaxxus, which has such a technology for this room temperature stabilization, the single dose, and this path to scale that we also clearly need to see in 2021 as we're headed into the new year.
We just got some new data from Johns Hopkins. Cases of COVID-19 now topping 70 million around the world. We've got Pfizer and Moderna on the cusp, as you say. Do you think there will be a lot of different options when it comes to actual distributors? I mean, obviously there are a ton of pharma companies working on it, but does the fact that Pfizer and Moderna, that they'll be the first to market, will they then take the majority of the ultimate share? Or do you imagine there are going to be, I don't know, a dozen different choices?
Yeah, I think that's a great question. I think it's hard to see right now that there's a dozen, especially in 2021, given sort of what we're seeing right now and the nice efficacy results. But I do think that, of course, there's a number of others that are pushing really hard behind Pfizer and Moderna. I think it's very possible that we'll see more entrants, but I think a lot is going to be riding on these first 2, plus maybe another handful that may get up for approval here headed into 2021. But the logistics challenge that you pointed to, I think is going to be pretty formidable, and it's going to be a real challenge with just 2 players, given the elements that they've got in their supply chain and the double dosing. They're going to need to be more sort of investment and resources mobilized to kind of get over some of those challenges that they pose, despite the fact that we've got a great starting point with the 2 of them.
So let's talk about those investments. You mentioned one of your portfolio companies. Obviously, COVID has, and the fight to get it under control has created some opportunities for up-and-coming biotech and health tech players. Where are you doubling down, knowing that fighting this disease is going to be really important for the next few years?
Yeah, absolutely, Emily. So I think, the sort of 2020, if you will, it's like pandemic and pivoting. I think those are maybe the 2 Ps that we've been seeing this year. I think one aspect that has also been clearly prominent is the detection, our ability to do surveillance, to do screening, to do diagnostics, to know where it is, and that will also help us deploy kind of our vaccine resources. And so, one of the other pieces maybe to talk a bit about that detection, and with that vaccine we have, where can we best use it in addition to those frontline workers? What types of communities? We've been very excited to support BioBot, which is one of the preeminent companies really focusing on that wastewater detection of COVID-19 that we've seen has been so important. This field of kind of wastewater epidemiology is just emerging really with COVID-19. And this team had been working in that space and then pivoted into COVID-19 pretty rapidly to help a number, 400 plus wastewater treatment sites around the United States really understand what was happening in their communities with viral levels and where there may be outbreaks happening. So I think that surveillance and protection of community health for COVID-19 as well as for other aspects will be important in 2021. And as we just kind of touched on, go ahead. Yep.
Well, look, we're going to have to leave it there, but that's really fascinating to hear where where you're doubling down and placing your bets. Ann DeWitt of The Engine, thank you so much for joining us. All right, coming up, 450 companies founded by Black entrepreneurs from across the United States competed in the Rise of the Rest pitch competition hosted by Steve Case's Revolution in partnership with Morgan Stanley, but only 3 could bring home a total of $2 million in prize money. We'll hear from one of the winners and Morgan Stanley Vice Chair Carla Harris on what rose above the rest to her. This is Bloomberg. The Chicago-based startup Reaply just banked $1 million at the Rise of the Rest, a startup competition that backs Black-led companies outside of Silicon Valley, Boston, and New York. The contest, hosted by the venture capital firm Revolution, awarded a total of $2 million in investment capital to 3 winners. I caught up with Reaply co-founder and CEO Gary Cooper earlier to hear his business idea and what it took to snag that top prize.
Reaply is a really simple idea. We're trying to scale circular economy solutions in the business world. And what that really means is we want to connect the end of use of a physical product to the beginning of a use of the same product by another person, right? So we want to create a system by which we stop harvesting things out of the ground to make new things and just use the things that are already harvested to make new things. And so we're just trying to provide technology to allow that system to work more smoothly.
Companies as big as Google are using it. How much demand have you seen, growth, especially in the pandemic?
We've seen almost 2,000% growth year over year since last year. So even amidst the pandemic, we've seen a steady growth in demand from our customer base. And that's most exciting as we move to a world that has to adopt the circular economy.
And when you say things, what do you mean? What are they buying and selling?
Yeah, there are things that we all use in our normal course of work, whether it's the desk that you're using to do your work on, or whether it's a computer, or whether it's something in a manufacturing plant, or whether it's something in a laboratory that a scientist will use. So our platform actually helps a company manage all of their physical assets or resources on one technology platform.
Now, with some companies working from home forever, how does that impact growth and demand?
I think it's going to impact demand even more. I mean, if you think about it, one of the case problems that we solve at Reaply is helping break down the natural silos of a business where people don't know about the physical assets that might be on another floor, another building, or another state within their same company. Now imagine everyone goes home to do their work. There's now 50,000 new silos if you're a company of 50,000. So actually, I expect the work that we're doing to even be buoyed by the unfortunate that we find ourselves in these days.
Now, I'm curious, you're an entrepreneur, you're trying to raise money, you've just won this competition. You know, there's not a lot of people who look like you raising money, not enough.
Yes.
For sure. You know, I'm curious what your experience has been and what you think can be done to lower the barriers to entry and increase opportunity.
There's a phrase amongst Black and diverse founders of hire and wire. And if I could say it in 3 words, that would be it. I think folks who are investors, whether institutional or strategic or corporate or angel, need to invest in more women, need to invest in more Black and brown founders. That's just of course. But beside that, companies need to hire more diverse technologists, more diverse business leaders, to kind of improve the pipeline that we all have in the kind of entrepreneur startup world. And so hire and wire would be my case solutions.
We just covered an initiative called 110, where a bunch of companies are coming together to hire 1 million Black workers who don't have college degrees, upskill them, get them trained.
Yes.
You also have the NASDAQ and Goldman Sachs adding requirements for companies to have diverse folks on their boards. I'm curious, do you think we need more mandates, more laws to make this a reality, given that it's taken so long and we're still not seeing the progress we want to see?
I think so. I think it's time that we not make it voluntary to do what every consumer wants, which is a diverse business climate, diverse business world, because we are a diverse country. And so I would hope that our regulations match our needs in the actual marketplace, and that's one of them. The other thing that I will say to kind of what you just said is that the consumers are pushing businesses to be more sustainable and to be more diverse. It is the case that companies who are more sustainable and more diverse have better returns. And so if you think about it from a differentiation perspective, it makes business sense. But I do think that there is a role for the government to play in this arena.
That was Reaply co-founder and CEO Gary Cooper, and joining us now to talk about what it was like to be on the investor side of the Rise of the Rest competition, hosted virtually for the first time. We've got Carla Harris, co-head of the Morgan Stanley Multicultural Innovation Lab, which contributes half of the $1 million prize that Reaply just won. And Carla, I could see you nodding as Gary was talking there. Obviously, so much work to do, and also I'm sure you're so excited about him and the other companies that you watch. What was it like to be on the investor side of the equation in this environment?
Well, I have to tell you, Emily, it was so exciting, and it continues to be exciting every time I have an opportunity to participate in something like this, to see the large number of companies that not only apply, but certainly the quality of the companies that get to the finalist stage. As you've heard me say before, Emily, there is not a supply issue at all. And every time we have an opportunity to do something like this, it's just reaffirmed. And the solutions that these companies are coming up with are solving real problems. And they're coming up with solutions that have a varied and diverse perspective. And that's frankly what Rise of the Rest is all about.
Talk to us a little bit more about the trends you saw in this particular crop of companies, whether it is by sector or the kinds of problems they are trying to solve, given that we are in a very unprecedented time in American and world history, and we don't know what next year is going to bring.
Yeah, I'll tell you the beauty of being in this part of the ecosystem, when you're looking at very early stage tech enabled companies, you do start to see themes. And part of the themes that we saw in the companies that were reviewed, I'd say you can put them in 4 categories. One, I would actually put Gary in a sustainability category, because even though it is about managing assets, if you think about it, there's a sustainability theme there, because he's talking about reusing assets that you already have, as opposed to going out to purchase or having those assets be reproduced again. There was certainly a strong theme in fintech, a very strong theme around healthcare and edtech. And every time we have an opportunity to review the companies that apply to the Morgan Stanley Multicultural Innovation Lab, it's the same thing over and over. You start to see, as they like to say in hockey, where the puck is actually going to go. So I'm very excited. And you're right, Emily, we don't know what's going to happen on the other side of this pandemic, or on the other side of the social unrest, when we finally start to produce solutions around that. But I tell you one thing you can know, and that is the fact that there's still going to be innovation around healthcare. There's still going to be innovation around technology, especially in the software space. There's going to continue to be innovation around financial services. So I think at a minimum, you can think about those 3 themes. And then obviously you see what's going on with respect to retail. And there's going to continue to be, I think, revolutionary innovation in that sector as well.
Now, you looked at 450 companies, and I'm sure there are hundreds, if not thousands more out there that we should be looking at. What is your advice to other Black and brown entrepreneurs who want to start a business, who are trying to get off the ground, the folks who didn't win the competition? How do they break through?
Well, I'll tell you, the beauty of even being a part of something like Rise of the Rest is that you have an opportunity to meet other investors. You have an opportunity to meet other people like us who are interested in helping you and giving you counsel and giving you connections. So the beauty of even getting involved in something like this is that it markedly expands your network. So what I would say is that even if you didn't win, you should make sure that you are staying connected to the people that you met throughout this process, that you are keeping them apprised of the changes that you're making and how you continue to evolve and develop. And you should continue to stay at it with respect to asking for that capital. There's a marked difference in the amount of capital that is available for entrepreneurs of color this year than there was last year. And I would argue, because we have had a bit of an awakening in this country, that my bet is that you'll find more capital available this time next year. So the game really is to stay at it and to stay visible and to continue to put points on the board, so that when you go back to someone that you met in December 2020, you can say, here is where I was then, but let me tell you about the 5 things that I've done in the last 60 days or the last 90 days. Momentum is powerful, and that will get people to take notice.
And look, we've got just a minute left. Last time we talked, you told me you're a glass half full person. And, you mentioned that there's more capital out there. We just had this big 110 announcement. I spoke with Ginny Rometty and Ken Frazier yesterday. Do you believe we're really at a real inflection point? Like, in 5 years, are we going to be, is opportunity going to be much more distributed for Black workers across this country? Or are we still going to be talking about this?
Well, I don't think there's any doubt that we will continue to be talking about it, but I will tell you, I would make a significant bet, Emily, that we'll be talking about it differently. We'll be talking about the things that were put in place in 2020 that actually made a difference. People will be talking about the strategies that worked. Now, I'm not saying that we will be there. I don't think that that you can take the gross amount of inequity that have happened for centuries and think that in 5 years it will be completely wiped out. But I do believe that we will have made a big move between 2020 and 2025. I refuse to believe that this is just a moment. I'd like to believe it's more like a movement.
I love your optimism, and I hope it is a movement as well. Carla Harris, Vice Chair and Managing Director at Morgan Stanley, thank you so much. Great to have you back on the show. All right, still ahead, Apple's greatest chip challenge yet, replacing Qualcomm. We'll get the latest on Apple's potential replacement of Qualcomm components coming up. This is Bloomberg. Oracle has said it's moved its headquarters to Austin, Texas, from its home state of California, to give more employees the flexibility about where they do their jobs. The news comes from a regulatory filing made Friday. The software maker follows HPE and Palantir in leaving California. Earlier this week, Tesla founder Elon Musk said he's moved to Texas as well to focus on big projects underway for Tesla and SpaceX. And Apple has started building its own cellular modems for future devices. That is a move that would replace components from Qualcomm. A cellular modem is one of the most important parts of a smartphone. Apple bought Intel's modem business last year. Bloomberg's Mark Gurman joins us to tell us more. So, Mark, you've been reporting on how Apple has been working to replace Intel chips in its computers. Tell us more about what it's doing to replace Qualcomm.
Yeah, Emily. So, next up after replacing Intel and Macs is replacing Qualcomm and its iPhones and other devices. Johnny Cerrugi, the company's senior VP of chip development, told staff in an all-hands meeting yesterday that the company started development of its first cellular modem this year. He didn't say when the company plans to release the modem, but based on the tea leaves we're seeing, it's likely to be at least a year or two away.
There are a number of different Qualcomm components in Apple products, not just this one, right?
The most key component that Qualcomm has in the iPhone right now is the modem. They used to provide additional components, but those have been watered down in recent years as Apple has moved away from Qualcomm and moved towards its own custom processors. But the modem is the big one from Qualcomm in the iPhone right now.
So this is potentially a huge blow to Qualcomm, right?
This is a huge blow for Qualcomm, right? Qualcomm gets 11% of its annual revenue, according to our data, from Apple, and Apple is their largest customer for this technology. As you remember, they struck a big patent settlement and a cross-licensing agreement last year, or I should say a licensing agreement from Qualcomm to Apple last year, $1 billion deal that finds Qualcomm's modems inside those new iPhone 12s that just launched in order to enable 5G. So is this going to hurt Qualcomm? Yes. The question is, how long will it take to really have its impact?
Now, changing gears slightly, CEO Tim Cook, as you've reported, told staff today it's likely they won't be coming back, most of them, to the office until June. What else do you know?
Yeah, so in that same town hall meeting where the cellular modem was disclosed on Thursday, Tim Cook said that it's unlikely that the majority of teams will return to Apple's main offices globally until June of 2021. He also implied that there would be additional work flexibility in terms of perhaps, working from home in some respects after that, but we're unlikely to see, or I should say we're not going to see any full-blown transition to a remote workforce like Facebook and others are, toying with for the future. This is still very much going to be a come-to-the-office company, but Cook did tell employees that, they learned a lot over the past several months, and, for better or for worse, they've seen success with the work-from-home model. You've seen how many products they were able to launch this year with minimal delays, so clearly it is working in some respects.
Absolutely. It is quite significant for a company that, historically has been as secretive and prolific in turning out hardware as Apple, that they can also move to this model, as you have reported. Our very own Mark Gurman, thank you so much for joining us on this Friday afternoon. And that does it for this edition of Bloomberg Technology. Wall Street Week with my colleague David Weston is coming up. This week's topic, IPOs.